From the world of politics to the world of business, this is Balance of Power with David Weston.
From Bloomberg World Headquarters in New York to our television and radio audiences worldwide, welcome now to Balance of Power. President Biden has the infrastructure bill signed into law in his first summit with President Xi behind him. What is next? For an answer, we turn once again to our Washington correspondent, Joe Matthew. He's the host, of course, of Sound on Bloomberg Radio. So, Joe, I must say, out of the corner of my eye, I can see Air Force One fueling up. So I guess that's part of what President Biden has on his agenda.
You got that right. He's back to his role as traveling salesman here, David, resuming that role to be exact after that meeting last night with President Xi failed to provide any real breakthroughs, any hard deliverables as we forecast around this time yesterday on Balance of Power. And the lack of headlines, the lack of real news around China helps this White House pivot right back to the narrative about the Biden domestic agenda, the economic agenda. And he is traveling today, just took off on Marine One from the South Lawn. He's on his way to New Hampshire, where the president is going to be kind of taking a victory lap, if you will, for the infrastructure bill he signed into law yesterday, but also making the pitch for his reconciliation bill, the social spending agenda that is still churning through Capitol Hill. Now, he's going to be making the case today in a rural town, a small town in North Country, New Hampshire, called Woodstock, New Hampshire, that's home to an 80-year-old bridge that was redlined almost a decade ago. New Hampshire, by the way, will get $225 million to fix bridges and about $1 billion for highways. As for the reconciliation bill, we've got our eyes here on the end of the week, David. Democrats say they are still waiting for the Congressional Budget Office to score that bill. That's something that moderates demanded so they could read it and actually vote on this with a sense of what will be actually paid for. And that's not going to be done likely until Friday. So once again, it could be a working weekend in Washington, David.
Well, not just a weekend. I wonder about the whole month coming up, because we do have a debt ceiling we have to get back to. We got some funding of the government. And I think there are very few legislative days, as a practical matter, between now and the end of the year, aren't there?
That's true. Yeah, the better part of 2 weeks is really all we're talking about. And you're right. December 3rd is the deadline for both the debt limit to be addressed and government funding, government operations. That could end up as a continuing resolution to sort of kick the can into next year. As far as this goes, the reconciliation bill that's been debated now for months, David, lawmakers in the House know that when that goes to the Senate, it will likely be dismantled and could come back in a very different form than they pass it this week. So don't take it to the bank what they pass this week. It's likely to go through a lot more changes between now and the end of the year.
Yeah, such a very good point. Thank you so much to Sound On host Joe Matthew. You can hear him every single day at 5 p.m. Eastern Time on Bloomberg Radio. To take us through what the Capitol Hill agenda means for U.S. business, welcome now Libby Cantrill. She is Pimco Head of Public Policy. Libby, great to have you back with us. Let's start with Build Back Better. And we heard Joe talk about the CBO scoring on Friday. I've seen some indications maybe it's going to come out light on the revenue side.
Yeah, that's right. I think there's some big question marks, particularly around some provisions that seek to increase tax enforcement. The White House has scored this at something like $400 billion. I think CBO is indicating that that score may be quite a bit less. And of course, as you've been pointing out, moderate Democrats are insisting not only to see the score, but to ensure that the bill is paid for. So if there are some issues in that score, that might mean that we might be going back, at least in part, back to the drawing table. And as you point out, this is 8 months in the works now. So we're still kind of at the top of the 8th inning, what we're telling clients right now, not quite at the end of the ball game, definitely getting closer than we were, but we still have a ways to go.
Well, I'm not sure if they had to do over again, the Democrats would have led with the price tag, but it's sort of gotten beaten into our brains now. It's $1.85 trillion, I think, at the moment. Is there a chance that that's going to come down depending on what happens, for example, with CBO scoring on the revenue?
Yeah, I think that's definitely a possibility. I think it will probably be more incremental if that were to happen. Of course, inflation concerns are a very popular talking point among Republicans, but even some Democrats are worried about inflation and the political and economic implications of it. And that could, again, lead some folks to be arguing for a smaller price tag, certainly not a larger one. But I think at the end of the day, it'll probably be near that 1.8 trillion, maybe 1.7 trillion. But importantly, David, remember that this is all scored over 10 years. So whether it's I mean, still a big price tag, of course, but it's nothing like the $5 trillion of COVID relief that was all very front loaded that we've seen into the economy since the beginning of COVID. This is going to be a lot more of an incremental economic impact, again, because it's scored over that 10-year period.
Well, let me ask you about something that's near and dear to the hearts of many people in and around New York, and that's SALT, the limitation on state and local taxes. Is that in? Is that out? What do we know about that at this point?
Yeah, that's actually probably one of the most popular client questions that I receive, David, from our clients in both California and New York and New Jersey to a certain extent. I do think that there will be some SALT relief at the end of the day in the Build Back Better bill. Now, whether it's going to be the House version's most recent SALT relief provision, which is increasing that $10,000 cap to $80,000 through 2030, it remains to be seen. There's some pushback among some Democratic senators there. But I think the point here politically, that you have a speaker from California, a majority leader from New York. This is way too of an important issue for the folks in those states. And as a result, I think you'll get some sort of relief, although it may be pared back from what you currently have in the bill.
One of the things a lot of Americans are asking for relief from right now is inflation. And it's really loomed up large, as you know, in the last week or two here. How is that affecting the discussion up there on Capitol Hill? And for that matter, is it informing at all this question we're waiting moment by moment for a nomination for the Fed chair, whether it's Jay Powell or someone else?
Yeah, I mean, I think that this is probably more of a political problem in some ways than an economic problem. I think we're in the camp that a lot of these issues will likely normalize when you get kind of deeper into 2022. But of course, that doesn't mean that it's any less of a political issue, as you point out. As I referred to, this is already a popular talking point among Republicans, understandably so. They really view this as a political opportunity. And again, among some Democrats, this is a concern as well. So I think the practical implications, of course, as we were just saying, this could argue for a lower price tag for the Build Back Better agenda. But of course, there are also going to be concerns about the composition of the Fed. And even though the focus really is understandably on who's going to be the next Fed chair, whether Powell gets renominated or whether it's somebody like Governor Brainerd, there are also 3 other vacancies that are going to be coming up on the Fed. So Biden here not only has a chance to replace the Fed chair, but really also has a chance to put other folks who might be more dovish into those positions. But of course, that's subject to Senate confirmation. And again, this is where I think all of this discussion around inflation could inform that, could make some of those folks a little bit harder to nominate, particularly if they lean more dovish.
Well, exactly, Libby. If you'd asked me a month ago, I might have just guessed he might tend to go a bit more dovish, President Biden, in his nominations. But given inflation, that seems awfully difficult to do right now. A lot of Americans are saying, what are you doing about inflation? And for the president to come out and say, what I did is I announced somebody who would be even more lenient on monetary policy, I'm not sure that adds up.
Yeah, I'm not sure how many Americans are really focused on this issue, but David, you're absolutely right that, of course, senators are focused on this because they are hearing that, folks are paying more from, gas to milk to rent. And of course, senators realize that monetary policy has a big influence on that. So I do think that this will be more part of the White House's calculus in terms of who they are going to be putting up. There's not a lot of daylight, honestly, between Governor Brainerd and Chairman Powell in terms of monetary policy. The big differences, of course, are more on regulatory policy, but it may, again, inform the calculus for those 3 other positions in terms of who the president ultimately nominates.
Libby, I certainly take your point that most Americans probably are not focused on exactly who sits on the Fed. But let me ask the broader question right now, because it was asked over the weekend of some members of the administration, what is the president doing about inflation? And I guess I'm asking, why isn't he releasing things like the Strategic Petroleum Reserve? Why isn't he doing things like backing off on some tariffs that might keep the prices down?
No, it's a good point. Now, I think that to the credit of the White House, it's limited in terms of what the president, Democrat or Republican, can actually do to really pull the levers of inflation. But this is a political problem. And I think what you're seeing from the White House is they realize that this is a political issue. They're arguing that some components of the Build Back Better agenda will actually help inflation, not hurt inflation, by increasing labor force participation, which could actually have downward pressure on wages and what have you. But as you just point out, they could increase the SPR, that's probably more incremental. Honestly, that's more kind of for the political splashy headline than it is really from a substance perspective. I do think you'll see some more rolling back of tariffs on some of our allies that have been put on by the previous administration. They could potentially help with the supply chain as well. One issue I know that the folks in the Department of Transportation have considered is whether they should help with the trucking shortage by deploying the reservists and the National Guard. So I think lots of things will be on the table. Again, I think arguably this is all going to be pretty, more incremental. But from a political perspective, they may advance on that just because they have to be giving the perception that they're doing everything in their power to help folks.
Yeah, I'm not sure Washington avoids those political splashy headlines in general. Thank you so much. We really love having you with us. That's Libby Cantrill. She is Pimco Head of Public Policy. And a programming note now, stay tuned to the New Economy Forum this week in Singapore. Tomorrow's lineup will include former Secretary of State Henry Kissinger and Commerce Secretary Gina Raimondo. Coming up, China expert George Magnus of Oxford on how to read the Biden-Xi summit from yesterday. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and radio. I'm David Weston. For Bloomberg First Word News, we go now to Mark Crumpton.
David, thank you. The jury in the trial of Kyle Rittenhouse has begun its deliberations. The 18-year-old killed 2 men with an assault rifle at a Black Lives Matter rally last year. He's charged with counts ranging from reckless endangerment to intentional homicide and could face life in prison without parole if convicted. The August 2020 shootings in Kenosha, Wisconsin came amid social upheaval across the United States after the murder of George Floyd in Minneapolis. Japan, which started doling out COVID vaccinations months after the United States, now has the highest inoculation rate among the group of 7, and it accomplished that without mandates of any kind. Japan has fully inoculated 75.5% of its population of 126 million people. That's according to Our World in Data, an online scientific publication that uses population statistics from the United Nations. Violence broke out at the Poland-Belarus border today. Poland used water cannon and tear gas to stop Belarus-backed migrants from crossing the European Union's eastern frontier, a day after the bloc approved new tools to punish those escalating the crisis. Belarus is under the threat of new sanctions and is facing accusations of mounting a hybrid attack on the EU by pushing travelers to the border. We are learning more about President Biden's virtual summit last night with China's Xi Jinping. National Security Advisor Jake Sullivan says the leaders spent a good amount of time talking about Taiwan. And he says the president reminded Mr. Xi he voted to support the island's self-defense when he was in the Senate. China's readout of the summit said President Biden opposed Taiwan's independence. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thanks so much, Mark. Well, let's stay on that subject of that meeting between Presidents Biden and Xi yesterday, the virtual meeting, I must say. They billed it as a summit, but expectations really were low going in, and not really much too specific came out of it. Welcome now, China expert. He's George Magnus, Oxford China Center associate and author of Red Flags, Why Xi's China is in Jeopardy. So, George, it's always great to have you with us. Anything having to do with China, we want to talk to you. So what did you take away from that summit? What do you think was accomplished, if anything?
Well, I suppose it's a mark of our sort of low expectations, David, that the fact that the President Biden and General Secretary Xi Jinping actually had some sort of dialogue, I mean, Zoom dialogue rather than in person, comes as good news, really. So we'd rather, as Churchill once said, that they kind of jaw rather than kind of dance, aggressive sort of language around one another. I don't think it actually achieved very much. Certainly the Chinese position seems to have been, as your package laid out to have been to focus the discussion a lot on Taiwan. And obviously there are many, many things that America and China do need to talk about. Many of them they will never agree about, but I suppose it's, as I said, it's a mark of where we are, that actually having a dialogue is actually, seen as a sort of a good outcome. And that's pretty much it, really.
Yeah, I wonder if they sort of got to neutral, back to neutral, away from a negative place, got to neutral. Maybe they needed to do that before they could move forward. If, in fact, they do move forward, and we don't know what next steps might be, where would they be most likely to move?
Well, it's been said by a lot of people that that although the United States and China will never be able to agree about a lot of things in the areas of economics and finance, technology, national security, and so on, that actually there are some things that they ought to be able to agree about and to kind of coordinate and cooperate about. For example, climate change, for example, over Afghanistan or Iran or other international kind of hotspots. I mean, theoretically, I think that's right, but actually the aftermath of COP26 didn't really kind of convey that kind of view, which is that, America and China can go the extra mile to work together to, bring to some kind of satisfactory conclusion progress, rapid progress towards decarbonization and so on. And, that last minute change by China and India to agree about the phase down of coal burning rather than phase out is kind of disappointing, really. Yeah, I think there are still areas where there are common interests that hopefully can be exploited to the world's benefit. But we shouldn't forget, really, that America and China are not just fierce competitors, but also adversaries when it comes to values, standards, and beliefs. And actually, we may even be talking about different kinds of relationships. China wants to focus very much on bilateral relations so that it can be seen almost as a victim every time that America disagrees with them about something. And I think it's in America's interest to talk about not just bilateral relations, but the multilateral threat that China poses to what we regard as the Western liberal order. And that is something where obviously America and its allies and friends need to kind of pull together. And there's been some, quite a few suggestions of late that that's actually starting to happen a bit.
George, as you know so well, in the world of international diplomacy, theatrics matter sometimes as much as substance, it would appear. Let's talk about the Olympics. I noticed that, in fact, President Xi did not, as far as we know, invite President Biden to come to the Olympics. They're just coming up in a few months' time right now. President Xi, at the same time, hasn't left the country in a long time. Well, how do those Olympics look right now? We saw in Tokyo, it was pretty tough for Japan. Is it going to be the spectacular that President Xi had hoped for?
Well, obviously, because of China's zero COVID policy, it's very unlikely, I think, that that China is going to open up to foreign visitors anytime soon. Certainly not before the Winter Olympics, and perhaps not even until after the 20th Party Congress, which won't be until the fall of 2022. So on the other side, I suppose that there has been a bit of speculation, at one extreme about being there sort of possibly diplomatic representatives from a number of different countries that may be permitted to come in. On the other extreme there's still talk about possibly boycotts or just cold shouldering the Winter Olympics.
Well, George, I do wonder about that. From your point of view, do you think it would make sense for the United States, I don't know if it's boycott, but take some action in refraining from attending, at least to the degree it would have, in order to send a message on so many issues that divide us?
My personal view is I think that there should be some kind of protest about it. Yeah, I don't think it's, I always kind of feel that actually for the Olympiads and for the Olympians that want to take part and who train and practice for these games, they shouldn't perhaps be the victims of the kind of political spats that we have. But I think that it is appropriate under current circumstances to register political disapproval about policies being pursued in China. Yeah, that's my personal view. I know that's not always universally popular, but
no.
I think it is merited.
The personal view of a true expert, which is what we really wanted. Thank you so much, George. Always great to have you with us. That's George Magnus of Oxford University's China Center. And a programming note, the Bloomberg New Economy Forum begins in Singapore. Tomorrow's guests include the CEOs of Goldman Sachs, Google, and PayPal. And this is Bloomberg. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Americans keep spending on home improvements as Home Depot earnings out today confirm. It's our stock of the hour, explained now by Mr. Dave Wilson. So good numbers for Home Depot.
Oh, absolutely. Whether you look at the top line, the bottom line, same story. It's like the spending that started last year in the midst of the coronavirus pandemic has, if anything, picked up. And given that we're seeing home prices rise, that may not exactly be a surprise. Put it all together. You look at earnings, you look at revenue, you look at comparable sales. So sales at stores open more than a year. Maybe that's the one that jumps out the most. 4 times the amount of growth that analysts expected on average in a Bloomberg survey. And then when you sort of dig into the numbers, what's interesting is, they had fewer customers in the quarter. So the number of transactions were down 5.5%, but the average sale rose about 13% and sales per square foot were up. Now, there's one obvious reason: inflation. I mean, Home Depot passing along the higher costs of lumber and other supplies. Well, that's one piece of it for sure. But Bloomberg Intelligence will tell you there's another thing. Contractors are a bigger share of the business, and they tend to buy in bulk. So put it all together, you can understand why the numbers are what they are. And what's particularly interesting about this set of results, for the last 8 quarters, Home Depot's shares fell after earnings. They're higher today, so that streak looks like it's going to be broken.
Well, and I'll say the headline for me, I was not paying attention, is they passed Walmart, if I'm not mistaken, in market cap, which was a shocker for me.
Absolutely. You go back in our data, which begins in 1987. That had never happened before today. So it may be the first time ever, because Home Depot's only been public since 1981. I mean, it just shows you how things have changed. Let's face it, Walmart's still a much bigger company by revenue, but when you look at operating income, it's comparable. And then when you consider profitability, Walmart's selling gasoline, groceries, a lot of low profit margin type items. Home Depot able to earn more, and that helps explain why they have indeed passed Walmart in market value.
It is quite a stock of the hour. Thank you so much, Mr. Dave Wilson. Coming up, we talk with Republican Congressman French Hill about the Biden economic agenda, inflation, and the Fed. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. For Bloomberg First Word News, we go now to Mark Crumpton.
David, thank you. In the UK, police are learning more about a suspected bomber who died when his homemade device exploded in a taxi outside a Liverpool hospital over the weekend. Officials say the 32-year-old was an asylum seeker from the Middle East who had converted from Islam to Christianity. Police are still trying to determine his motive and whether anyone else was involved. 4 men who had been detained were released. Britain's official threat level was raised following that blast. 3 German political parties say they hope to clinch a deal next week to form a new government, keeping center-left leader Olaf Scholz on track to become Germany's new chancellor in December. Scholz's Social Democrats narrowly won the country's national election in September. Talks on a coalition with the environmentalist Greens and the business-friendly Free Democrats, both of which also made gains in the election, opened last month. U.S. Secretary of State Antony Blinken will spend the next 5 days in Africa. He'll try to boost the so far unsuccessful U.S. diplomatic efforts to resolve deepening conflicts in Ethiopia and in Sudan, and to counter growing insurgencies elsewhere. He begins his trip in Kenya and will also visit Nigeria and Senegal. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Thank you so much, Mark. Congress may have gotten the infrastructure bill behind it, but it still has a full agenda, including the president's Build Back Better plan, funding the government, and the debt ceiling. For the view from the Republican side of the aisle, we now welcome Congressman French Hill of Arkansas. Earlier, Representative Hill served as Deputy Treasury Secretary for Corporate Finance under President George Herbert Walker Bush. So, Congressman, always great to have you with us. Let's start with that Build Back Better plan. And I guess the most important thing for us to focus on right now is the Congressional Budget Office. What do we know about the scoring that's likely to come in, I guess, on Friday?
Well, David, it's good to be with you. Yes, of all the committees that have been scored, only about 6% of this Build Back Better program that Joe Biden is promoting has been scored. CBO says they might produce the balance of the score by Friday. This is important because I think it's going to show a substantial increase in costs and a lack of it being paid for. Two promises that Secretary Yellen and Speaker Pelosi have certainly made on the president's behalf is that it's not over the 1.75 trillion, and it's all paid for. CBO is under pressure right now to produce the truth on that point. Wharton last week said that it could cost $4 trillion, and the gimmicks are there on the revenue side. For example, they say they're going to get $400 million more, David, from hiring 80,000 IRS agents. 2 weeks ago, their original draft said it was $200 million. So what is it? I think there's a significant tax gap on the revenue side, in addition to a spending gap, enormous spending gap on the expense side.
Yeah, just to be clear about the Penn-Wharton budget model, they said the $4 trillion, if in fact the things they propose continue indefinitely rather than have fixed limits on them, because the way it's proposed, they have limits. But let me ask you, from your opinion, you're a Republican, but still, do you expect maybe the price tag comes down? Because it wasn't just the commitment from the administration. You also have some moderates in the Senate and the House who are saying we're a little concerned about how much money we're spending here.
Well, particularly Joe Manchin of West Virginia and Kirsten Sinema of Arizona have said, I've got problems, or I would say they have problems publicly on the revenue side and the expense side. All that's going to come to a head this week. And it may be that Speaker Pelosi passes an even more expensive, more liberal, more expansive measure here in the House if she can hold her votes. And then all those provisions are stripped out in the Senate, and the bill has to come back to the House. So that continues to have this battle inside the Democratic Party between the far left progressive movement that's driving this bill and putting those moderates on the spot that won their Democratic congressional seat in a district won by President Trump.
Congressman, as I mentioned in introducing you, we also have the debt ceiling issue. We've got funding the government, and also there's a defense authorization bill. Can you get all that done before the Christmas holidays?
Well, the leadership of the Democratic House and the Democratic Senate need to. Particularly the defense authorization bill has many important measures in it, pay raise for our troops, all of our strategic obligations to support our military around the world and protect the United States. And it has important oversight of the failed evacuation from Afghanistan. Those provisions are very important, I think, to the American public. So I hope it's passed before Christmas. And then Speaker Pelosi and Leader Schumer have to come up with a plan for the debt ceiling limit and present that as well.
This all comes against the backdrop of some numbers that some people find alarming on inflation right now that we've been getting. Address the question of inflation, how it's affecting things like Capitol Hill, and does it read at all against the question of who's on the Fed? Because we're expecting any moment now an announcement from the White House whether Jay Powell will be nominated for another term as chair, and there are also 3 other vacancies, as I understand it.
Joe Biden is promoting a Bernie Sanders progressive spending agenda. In other words, we spend about $4.5 trillion a year. We spent $6 trillion fighting the pandemic, and President Biden has put through his infrastructure plan of over $1 trillion, plus his $1.9 trillion last March. So what we have is unparalleled fiscal stimulus. That's what's driving inflation when you combine it with the most accommodative Fed in 30 years, where we're buying $120 billion of government securities every month. That's what's driving inflation. What's making inflation spike and be worse are these supply chain issues. So I don't believe inflation's transitory. I've had my yellow light blinking on this since last February when I warned Chairman Powell that this was an important issue. Now we're confronting the most expensive Thanksgiving for American families. This is hitting Americans straight in the pocketbook. And I'm fearful that between the fiscal policy plans of the president and the accommodation of the Fed that I believe has gone on long enough, we're in trouble on the inflation front.
Congressman, I know you believe in an independent Fed. You worked in the Treasury as well as being in a Congress. But if you were just giving advice, not controlling, but having advice, do you think that the Federal Reserve needs to be tapering their bond buying purchases faster, and for that matter, really moving on to raising rates?
I would have, if I'd been a voting member of the Open Market Committee, I would have moved tapering earlier this year and sent that signal to the market to get ready for that over time. We never really fully unwound, David, the balance sheet expansion after the 08-09 crisis. We took a step forward that way in 2018 and 2019, but it stopped. And then in the pandemic, we've grown the balance sheet to $8 trillion. So I would have begun tapering sooner. I think that's what the market expects. And I believe we've had a lot of misallocation of resources with interest rates at zero and this unparalleled amount of accommodation in the markets.
So, Congressman, in your long curriculum vitae, I left out the fact that you ran a bank back in Arkansas as well in the private sector. So let me go back to the rate hike question, not the tapering, the hike question. Do you think that the Fed should be raising rates faster than what they're talking about, which is sort of the middle of next year?
Not necessarily. I think that tapering is where they've chosen to begin. I think that's the right place to begin. And as I noted, we didn't really stop tapering in the QE mode after the financial crisis. So that's the place to start, is to stop growing the balance sheet. And you can tell that by looking at the reverse repo engagement over the last few weeks of the Fed. That means they're soaking up a lot of the money that they're putting out there, which makes no sense. So we have too much fiscal accommodation by Joe Biden, and I believe we should have started tapering a little earlier. But they have made that announcement. They are doing it, and I think that's the right approach first.
One last one, if I could sneak it in, on the fiscal side, which you mentioned. If, in fact, the Build Back Better did pay for itself, I understand you think it won't, but if they managed to figure out how to do that, do you agree that would not be inflationary?
Not necessarily. I know that that's a point of contention and argument by the Democrats. But if you look at all the stimulus that we've put in, the leftover CARES Act money plus the $4 trillion we've just approved in March and now last week, and you add to this social spending, even if it's offset, I think you still have an inflationary pressure given where we are with commodity price shocks and the supply chain. So I don't think that ends it. I just urge everyone to look at the residential real estate market as people's exhibit A of why I think this is getting out of hand.
Congressman, always a treat to have you with us. Thank you so much for your time.
Thanks,
That's Congressman French Hill, Republican of Arkansas. Coming up, U.S. energy policy in the wake of COP26. We talk with former Energy Secretary Dan Brouillette. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Most of the world leaders gathered in Glasgow last week to reach new agreements on what to do about climate, with some lofty goals, but what some thought was a lack of some specifics. Welcome now someone who was responsible for U.S. energy policy under President Trump, Dan Brouillette. He is now the president of the infrastructure business at Sempra. So great to have you with us, Mr. Secretary. Give us your reaction to COP26 overall. What did it accomplish?
Well, thanks, David. Thanks for having me today. I look forward to the conversation. Look, I think there's been a lot of commentary on COP26, some good, some bad. At the end of the day, I think there's a recognition that we need to move perhaps even more aggressively on some climate regulation, on some climate initiatives that both the private sector and the public sector are taking in order to meet the goals that were established by various governments around the world. That's a good thing. We should be moving forward on that. We all want clean air, and we all want clean water. There are some challenges, however. Some of the commentary pointed it out. When we view energy policy solely through the prism or solely through the lens of climate policy, we're going to run into some challenges. And we're starting to see that now around the world. One of the challenges that we face with governments, and in some cases, even private industry, pushing aside some of these important baseload fuel sources, things like nuclear power, things like natural gas. As you push those aside, it is at this point in time impossible for renewable energy to keep up with the escalating demand that we see in these economies around the world. I'll give you one quick fact, David. Today, the best batteries that we have, the lithium-ion batteries, the very best batteries that we have, have only 1/10 of the energy density as some of the fossil fuels that some are trying to push out of the marketplace. Until we can solve the problem of battery storage, until we can solve the problem of grid scale battery storage, renewables will simply be dependent upon these baseload sources of power. So to the extent the commentary in COP was derisive or attempting to move these fuel sources out of the world portfolio too quickly, perhaps, that's a bad thing, because for some developing nations in particular, they need natural gas not only to meet their emissions and their environmental goals, but simply to keep the lights on, or in some cases, simply to have lights at all. And we should be concerned about that.
So, Dan, I'm really curious, as someone who did set U.S. energy policy, how do we manage that transition? If we agree that sooner or later we have to get to that world, but we can't be there right now, how do we wean ourselves off of whether it's natural gas in Europe or it's gasoline at the pump here in the United States? And we just saw Mr. Barkindo from OPEC today say we're not going to have oversupply in the near future, and I guess that means gas prices will go down.
Well, we'll see. OPEC's a different player in the marketplace. As a cartel, they can set prices and they can set production numbers in ways that the United States obviously cannot, by function of U.S. law. So we'll have to wait and see, if he's correct. OPEC has his longstanding mission of what they refer to as stabilizing the oil markets, and they've done a decent job on occasion of doing that. But with regard to the overall transition and moving away from fossil fuels, it's going to be quite some time. And that's what I meant earlier about viewing these policies solely through the prism of climate change. A developing country doesn't think about it that way. A developing country is trying to meet, yes, the environmental goals, but they're also trying to provide economic opportunity for their citizens. And they will move to the cheapest and sometimes, the only fuel available for them. And that's important that we allow them to do, and then, rather than force a transition, perhaps provide incentives and provide, through innovation, cleaner fuels for them to use. And that's where we see natural gas. It's where we see some newer nuclear technologies coming online. These are all sources of energy that developing countries can use. And frankly, in developed countries like the United States and in Europe, the use of natural gas is going to be with us for quite some time. Fatih Birol does a great job at the International Energy Agency. They predict the use of fossil fuels will continue for several decades into the future. My old department in the U.S. Department of Energy, the Energy Information Administration, suggests that fossil fuels are going to be with us for perhaps as long as 40 years. And if that's the case, then our obligation is to develop technologies that allow us to use these fossil fuels much more cleanly than we're doing today.
So let's bring it to the here and now, which is the gas pump. A lot of people are reacting to really inflated gas prices here. President Biden has really complained about it. He's even asked OPEC Plus to increase its production. The Strategic Petroleum Reserve, if you were back in your old job as Secretary of Energy, would you recommend to the president that you release funds? Will it make a material difference in the price of oil?
No, it won't. And anyone who has studied the oil markets for any length of time knows that. It has a psychological effect, which is very short-lived. It doesn't usually make it past a few days. Traders will act upon it and they'll move out of some positions, but over the long run, it makes no difference at all. And David, it's not really the purpose of the Strategic Petroleum Reserve. As I mentioned earlier, OPEC is a cartel. They can set pricing and they can set production numbers. That's not what we do here in the United States. The reason that the Strategic Petroleum Reserve exists is in the event of a supply disruption. We have that available for the American public to stabilize a market. It is not there to affect the price at the pump. And, it requires a presidential declaration of an emergency. And, we'll see what happens.
Mr. Secretary, let me ask another tough one here, and that's natural gas in Europe. The prices are really spiking, and Russia may not be a cartel, but it seems to have a lot of influence over natural gas prices, whether it's the Nord Stream 2 pipeline, whether it gets done or not, or through Belarus. What is the solution to Europe's problem right now with natural gas?
Well, it's more supply, David. What's happening across the world, not only Europe, around the world, is scarcity. We have, during this period of a pandemic, many in the industry have not invested enough to continue the production at the levels that we need to meet the demand that's now coming back online post-pandemic. So that's one issue. They're being very, very disciplined about their capital allocations in the private sector. The second part of this, however, is we need to look at regulatory constructs in these various countries and determine whether or not they stand in the way of additional supply. It's a basic economic problem. When you have less supply and there's increased demand, you're going to have higher prices. So for Europe, for other parts of the world, continued development of infrastructure, things like LNG import facilities, and importantly, regulatory constructs that allow the continued production of energy all across the world.
One last one, Mr. Secretary, and that is, can the United States help Europe this winter on this? Is it feasible to have LNG shipped over to Europe?
Yes, it is, and it's very, very competitive. We've seen that for the last couple of months, and I must say, David, I saw some news this morning that there are some in Congress who are suggesting that we not export LNG from the United States. That would be a disastrous move, not only for Europe, but here in the United States. It would collapse production of this important resource and this important energy source. So I hope that that's not where the Congress or the U.S. Department of Energy or anyone else in the government is looking for answers.
Okay, Mr. Secretary, always a pleasure to have you with us. We really learned from it. That's former U.S. Energy Secretary Dan Brouillette. Coming up, St. Louis Fed President James Bullard on a more hawkish Fed. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and radio. I'm David Weston. Everyone is focused on the high rate of inflation these days, and a lot of that focus is on the Fed and what it could do to help. It's a point that is not lost on those most responsible for setting monetary policy, like James Bullard. He's the president of the St. Louis Fed.
The inflation rate is quite high. The core PCE inflation rate, the committee's favorite measure, is about 3.6%. That's the highest it's been in 30 years. Well above our 2% target, and that number already throws out food and energy. So, you're taming the data a little bit when you look at that kind of measure, but it's quite high. It does not have the reputation of moving down very easily. So I think it behooves the committee to tack in a more hawkish direction in the next couple of meetings so that we're managing the risk of inflation appropriately. If inflation just happens to go away, we're in great shape for that. We're set up for that. But if inflation doesn't go away as quickly as many are currently anticipating, then it's going to be up to the committee to keep inflation under control going forward.
Well, when you say tack in a more hawkish direction, are you talking about speeding up the taper, even with a risk of a taper tantrum? Are you talking about changing forward guidance? How would you tack?
I think we've gotten past the taper tantrum issue because we went ahead and went ahead with the taper here. But we could move faster. We kept optionality on this that. We could speed up the taper if it's appropriate. We have a hot CPI report here. As you know, I've advocated a faster pace, a 2010 pace. That's 20 per month less on Treasury purchases and 10 less on mortgage-backed security purchases. The reason I propose that is that we would be done tapering at the end of the first quarter next year, and that would give us a little bit earlier moment that we could assess where the data is and decide what to do on rate policy. So I think that's something to consider. I mean, some might say, well, that's faster than they'd like. I don't know. But we did retain the optionality on this.
That was James Bullard. He's the president of the Federal Reserve Bank of St. Louis. He was speaking earlier today on Bloomberg Surveillance. And a programming note now, stay tuned to the New Economy Forum this week in Singapore. Tomorrow's lineup includes former Secretary of State Henry Kissinger and Secretary of Commerce Gina Raimondo. Coming up, Balance of Power continues on Bloomberg Radio. In our second hour, we'll talk to Carly Fiorina. And this is Bloomberg.